Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Monday, December 11th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, we're holding at highs. Here's the previous month's high. Let's bring this down right there. That's the previous month's high. And prices come up here and rejected on the second trading day. Didn't quite take out the low here, pulled back, and is now retesting that high at the moment. We continue to be in a very strong uptrending structure. I mentioned before that any pullback, even if we gave up 28, would suggest a taking out that 26.05. Any pullback into that zone could still be a fantastic buy. So right now, this thing still remains very bullish, continues to hold near highs, and continues to push to new higher highs. But overall, after this uptrending behavior, it's not uncommon for price to get stuck in a range here and continue to develop a bigger HPN here as this thing digests the recent overall price move. Also, we do have on Wednesday the Fed interest rate decision and the FOMC statement, so that's going to be something where the market may kind of coil heading into that event. Here's the NQ. Right here, what you're seeing is, again, something very similar to the ES. After trending behavior, we're now seeing an expanded quality to this range as price digests the recent overall price move. Continues to hold at highs overall. Bulls continue to defend this FOMC key level, 62.38, continues to be very important. Look how bulls continue to defend it there. That also tells you there's an increased inventory of sell stops below. So should price reject these highs, we could be coming out to take those lows. So that could be something to defend on the way back up as well as price comes into this LVN. So right there, that's kind of the blueprint here with an upward bias for the NQ. Again, heading into the FOMC key level that we're going to get on Wednesday, we could see this thing kind of coil up ahead of that event. Right here we have the CL and price basically holding within this range as well. We have this kind of key range that we're holding within. This overall trading range behavior is kind of building energy for that next big move. This right here, this recent low, didn't quite take out this low. It was another higher low within the uptrending market and another extreme reversal pattern that has so far worked out. We continue to see signs of lower highs, and so every price that goes above this previous month's close, that white dotted line, so far has been rejected. So right now, price is testing those levels yet again, and we'll see what happens here. But again, if there's any failure to hold above this level overall, we could see another dip into this lower level. Finding acceptance above this line suggests a retest of recent highs. So continue to watch that key level in crude. Lastly, looking at gold. Gold's had a very nice sell-off here away from the recent trading range, that key range there with the CVPOC here at 1280 half, actually just a little below that now. Very solid continuation to the downside. What I mentioned to our trading room Friday was watch Sunday, watch Monday pre-market or RTH. If price pops above this high here, that's the Friday high. If price pops above that high and fails to hold above that level, we could be looking at a very bearish start to the week as this thing continues to drive toward an area or a level where it can see or find rejection. And right now that could be somewhere between 1217 and 1200 evens. So we could still have much more downside ahead. So again, if price fails to hold here above, say, 1255s, that could be an early idea that we're headed down towards, say, 1230 to begin the week. So keep that in mind. Any acceptance above 1255 would then start working prices back higher. So 1255 is the key pivot here to watch for gold as we head into the rest of the session. All right, that's it for now. Good luck, trade well, and I'll see you soon.